Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. So as I said yesterday, since market right now mostly inactive due to the celebration of Thanksgiving in the United States, we will take a look at some currencies that we're rare to take a look at, and in particular speaking the Japanese yen. To be honest, I prefer to avoid trading the Japanese yen in the recent few months just because it is a strongly politicized currency. Politicized not in terms of the geopolitics, but in terms of the policy of the central bank. And actually, all the performance of the Japanese yen that has happened is due to the really soft policy of the central bank, who just making the quantitative easing across the year, despite that all other major central banks have increased rates. So you probably know that better than me. So if you try to trade this market, you'll become really sensitive to possible unpredictable action from the central bank, such as intervention, whether it will be verbal or real intervention, and other stuff. Some decision making on the changing of the yield corridor that the Bank of Japan controls. So, other words speaking, it were really more interesting trading steps on other currencies rather than to deal with all this stuff. But since we have taken a look at it, because actually currently a lot of experts suggest that the policy of the Bank of Japan will change. First of all, they probably will stop its quantitative easing and will try to tighten the rate a bit, or at least become more friendly to this possible scenario. And according to different polls, each one of them I saw on the Reuters, its analysis suggests that probably Japanese yen will rise a bit in the next year. Here we're considering 6 months chart, guys, because the long-term picture, it directly shows you the fundamental background. So the long-term chart is the picture when the actual technical analysis meets the fundamentals. And we're starting right from the major point that will make the impact on all following performance of the Japanese yen. If you'll take a look at the performance here, you could see that we have, first of all, it was really great butterfly that we also were considering almost 10 years ago. So it was forming here. It was stopped in the 2012 area, 12 year, right there. Those who are following us for a long time probably remember that we talked about this butterfly. Now we have the big head and shoulders pattern right there. So with this ABCD pattern, market hits the OP already. The minimum target of the head and shoulders is done, and actually mostly this pattern is completed. But here's two moments. First of all, with this upward action to the OP, we see really fast and strong action. That was a retracement, by the way. You can see the pullback down after the OP, which is a reaction on completion of this target. But take a look what's going on right now. Market re-established upward action. Normally, if market is bearish, head and shoulders is completed, or not the bearish, but intends to take reversal, head and shoulders is completed, it should start downward action. But instead of that, you can see that after retracement, market is reestablishing after upward action. So it means that these points, these two recent candles in the 6 month chart, so last year or this year, in fact, this is extension mode, and this is continuation of this upward action. So we have extension, retracement, contraction, extension once again to the OP, contraction, and now it should be extension. If an extension starts, by the all rules, it has to reach the next target, which is 108 XOP, and above the all-time high. It's 1986 where it has started its trade. So this will be about the all-time high. Currently, we can't exclude any event because who knows what will happen in the modern world, just because it's absolutely unpredictable. But we could control this performance. And as I said, this is the major thing for Japanese yen. For us, the major task is to estimate what will happen around the previous top. If we will see wash and rinse and start dropping of the Japanese yen, bearish patterns that will be formed around the market will start dropping. In other words, any signs of the failure of this action, it will work like the double repo. So this is not the double repo, of course, but the market mechanics on the top, when the bulls treat this as a pullback and start buying, or better to say selling yen, pushing price right back up again, then they will not able to push through the top, but then capitulates and market collapsed. This is what usually happens on the top of the double repo pattern, and here might happen the same stuff. That's our primary task to see. If instead market will just break it up and keep going higher, it will mean that this extension mode and Japanese yen will become weaker. Market in longer term should continue upward action. So that's really what major thing on the Japanese yen to consider right now. Now, if we will consider some details, let's go back to the MetaTrader charts. So start from the first from the weekly chart. Here's we have a few moments. First of all, what stands actually in favor of the possible wash and rinse and collapse? First of all, take a look at this upward action. It is definitely slower than this one that has led to the major OP right there. That was retracement after OP. We have the divergence on the weekly chart, and this divergence is confirmed. So you can see the trend has turned bearish on the weekly chart. Although on the monthly chart we have the same divergence right there, but it has not turned yet trend down. So here's nominally we have still bullish trend. And right above this market we have few targets. First of all, we have the OP around 152.66, but also we have major OP slightly higher. It will be around 155. So it means that's area around 153 and 155. It will be somewhere in an area to watch for. And here's particularly where the wash and rinse could happen. So market could try to hit the OP, showing the wash and rinse of this top, and see what will happen next and collapse. Alternatively, we have potential butterfly, but it stands around 158, which seems a bit, well, too high. So maybe, of course, it might happen, but I would watching first for this 153 and 155 area. So that's what we need to keep an eye on the weekly chart. It means that at this point, right now, it is not time yet to take the short position. This is not yet the reversal, because overall upward momentum rather strong. Market shows just minor pullback here. On the daily chart, trend has turned bearish. Market dropped to the nearest support area, forming bearish reversal swing here. But at the same time, we have take a look two patterns. First of all, we have the Chod-Napoli stretch, because market hits the oversold around the fib level. And second, we have nicely looking morning star. It means that some upward action here should happen. That makes me think that here we could get two possible patterns that could trigger the major reversal, if of course we get the reversal. Now we're speaking about the scenario of the reversal. First pattern, it might be the double top, so it might be the first top, and it might be second top here. If market returned back up, showing minor wash and rinse and then collapsed. Alternatively, it might be big head and shoulders pattern. So if market will climb to the 153, as I said, it might be shoulder, head, and shoulder again. As you understand, this head that looks really extended on the daily chart, on the monthly chart could look like the wash and rinse, just minor spike here above the top and fast return. So these two patterns to watch for. So currently at the nearest time, I expect that yen should show some upward continuation just because of the big strong upward momentum, and this is first retracement of the big rally. Usually momentum still stands in place. It should push price higher, supporting upward action. So it means that I had not considered this point as a taking the short position. Particularly speaking on the 4 time frame chart, it might be some kind of the ABCD with the OP first round 151, C point could change if, for example, market will show a bit deeper retracement, but you get an idea. So this might be some A, B, C, D. XOP stands 153 once again. So maybe market will complete this XOP here on the 4 time frame chart. Something of this sort. I'm not calling you to buy because, this is short-term performance here, but it's not forbidden, of course. You could consider this upper direction, calculate fib levels. That's probably 30%, 618. If you feel comfortable, you could try to take the long position with the possible upper continuation. This is not forbidden, but this is choice is up to you, because my task here is to explain, from my point of view, what is really vital moments for the Japanese yen that will determine the whole following action on the currency within the long-term interval. So upper breakout here means that we could go in the long term, within a few years, probably right to the 180. If market failed to do this, and these signs we already see, although they are not maybe very evident, but this chance exists that this will happen, we will get the major reversal in the Japanese yen with the big patterns and really big downside action. And our task here is to keep an eye closely on the patterns that may be formed. Supposedly, if we speak about the daily chart, what time it will take to form the hand charts? Probably, well, months. So within the December, we probably should get some answer. So sorry for this long video, but we really rare take a look at the Japanese yen. That's why it's a bit more extended. Hopefully you will find it useful.